Well, hello. It's Tyrone Jackson, the Wealthy Investor, with another educational video to help you become a better trader and investor. Today we're going to talk about winning stocks versus losing stocks, why some stocks go down in value, and why other stocks actually rise in value consistently. So let's jump right into this lesson because there's something you're going to have to know. We're going to start off looking here at one of my favorite Dow stocks. Now, if you've been following me on Facebook or watching all of the educational videos that I post here, you know how I feel about trading stocks that are members of the Dow Jones Industrial Average. Those top 30 stocks, they're the biggest, best, most conservative stocks in the stock market, and they comprise something called the Dow Jones Industrial Average. And we're looking here right now at a company called AT&T. Some of you are familiar with AT&T because what? You pay your cell phone bill to them. And I always say, and AT&T is of course a Dow component, if you're paying a company, people always ask all the time, what's a good investment? Well, you may want to look into the companies that you pay because you may want to benefit from their rise in stock price. AT&T, we're going to look at a series of 5-year charts here. AT&T stock has a tendency to rise over time. Now, this is really interesting because maybe about 30, 40 years ago, AT&T was the phone company. But today, there is no company that is just the phone company. It's companies that service and sell us online services, wireless access. That's because the world is changing. And the world is changing. People spend money with AT&T. That money is called revenue. And revenue is what drives the stock price higher. So if I actually click over here using Yahoo Finance for free stuff, where we do all our research, you'll notice that the revenue on AT&T annually actually rises. And when you have revenue that is rising on an annual basis in the stock, guess what? You're going to get a picture that looks like this. Okay, so we're looking for stocks where people and companies are spending money. That's what makes a stock a good investment. It's not a hunch. It's not a guess. It's a feeling. I hear people say, I have a feeling the stock is going to go higher. Feelings are for relationships. They're for people that you love. They're not for trading and investing in the stock market. Let's take a look at another company. This company is Exxon Mobil. Its ticker symbol is XOM, right? And what do? They're in the oil and gasoline business, the refining business. Now, here's somewhat of a no-brainer, although there's really no no-brainers in the stock market, but I'll use that term anyway. If we look at a 5-year chart, in the Wealthy Investor Program, we do everything by picture first. If we don't like the picture of the stock price, there's no need for us to even consider investing. But if we scroll down here, we'll notice the 52-week range. Right, a year ago, the stock was $84.79. It's been as high as $104, and today at the time of this taping it's at $100. Now this is a really good sign in the stock market. When a stock is close to its 52-week high, that means that there's demand for the stock. Investors, not individuals, but the institutions, the banks, the insurance companies, the college endowments that buy large shares of stock, they like it. Now let's talk about you. When you go to the gasoline pump, have you noticed that gas prices are going up or down? Overall, in the past 5 years, they've gone up, which means who's the biggest beneficiary of that? The oil refiners. I hope you're starting to see a pattern here, right? So I'm not telling you to run right out and buy Exxon Mobil Corporation stock. That's not what these educational videos are all about. So you have to learn a little bit more. But today is really about being able to spot a company that makes a good investment, and you can see these companies out in the world. That's why there's a good place for you to start. They're not software companies where you have to guess, right? So we want to make sure that we're companies where consumers and companies are spending money, generating revenue. That causes the stock price to rise. There's demand for the stock. Let's take a look at another stock. Something is wrong here with this picture. You notice that this stock price has a tendency to go down? In the Wealthy Investor Program, we call these bad dates. In the Wealthy Investor Program, we don't marry stocks. We only date them. This is a bad date. Notice that this company's stock price has gone from $20 in the past 5 years down to what? $1 a share. And the name of this company is called Radio Shack. Well, What would cause a stock price to go from $20 down to $1? You know, if you bought this at $20, you pretty much are hurting right now because you've made a bad investment. Why? It's because less people are shopping at Radio Shack. And in the 21st century, if you name your company Radio Shack, you're automatically missing the technology boat. But what's happening is Radio Shack is closing stores because there's less demand for their product. They either need a new ad campaign, they need some celebrity endorsements, they need something, they need to change their name, their image, so that it's in step and in line with today's world and today's marketplace. Remember, there is no one phone company anymore. They're wireless services and companies. So the companies that we invest in, even if they're members of the Dow Jones Industrial Average, which Radio Shack is not, they need to keep up with the times. So when you're investing your money, you want to invest the money with companies that are doing what? That consumers are actually utilizing today and that are keeping in step with the real world. Unfortunately, Radio Shack is not. Its ticker symbol is RSH, and the stock is paying the price for it. Why? You must understand the story of the stock that you're investing in. That's what this video is all about, having some sense of the story. Now, anytime you study with me or any of my teleconference calls or newsletters, you know how I feel about Disney. Look at this picture, right? This stock price has a tendency to rise. In fact, it has doubled. If you bought it at 40 and it's at 85, a $10,000 investment is now worth over $20,000. A $100,000 investment is over $100,000, right? A $100,000 investment has also doubled. Why? Because Disney owns ESPN. Disney owns their theme parks. They own the Star Wars movies. They own Captain America. And as I always say at my in-person workshops, the money they make from the parking lot alone, plus all the merchandising and food. Disney is also in the real estate business. They own millions and millions of acres around the world that has a value. So Disney also raises its prices at a theme park. I don't particularly care for that because I like to go to Disney World, so I make sure that I own the stock. Disney's stock ticker symbol is DIS. Let's look at the technical analysis and do a little analysis here. The 52-week range is what? A year ago, Disney shares were at $60.41. That was their low. Today, they are at 86.07 is the 52-week high, and the shares today at 85.75. You see how close it is to its 52-week range? That's a really good sign. The question I get on Facebook all the time is, what's a really good stock to start out with? And can I buy one share of stock? The answer is you start with stocks that you know, preferably within the Dow Jones Industrial Average, to start investing and buying shares, and stories that you understand. It just so happens that Disney fits all those criteria. So the moral of the story here in this video lesson: don't buy stocks if you don't understand how the company actually makes money. Don't buy stocks that consumers aren't spending money with, because that will affect the share price. A company like Disney is really in touch with today's world and beyond, and it reflects itself in their stock price. This is Tyrone Jackson, the Wealthy Investor, saying I hope this video shed some light on understanding a little bit more how to invest and how to understand the story of a stock that you may think about purchasing.